Well, great. Let's go to our third panel, the response, public banking. And let's get right to it. We've got Karl Beitel, Director of the Public Bank Project, which supports municipal governments in finding viable alternatives to funding for local, community-centered economic development, affordable housing, large-scale infrastructure investment. He's currently a visiting fellow at the Roosevelt Institute in New York, developing both city and region-specific studies on options for creating publicly controlled financial institutions, our topic of the day. Conducting research on relation between ongoing transformations in national and global financial markets and the shifting public framework of urban development. Karl?
I've been asked to share a little bit about the experience in San Francisco and the San Francisco Bay Area. We're also trying to move a campaign in the East Bay to form a series of municipal financial institutions that would probably be more of a kind of a regional public banking consortium there. And just to give a little bit of background to where we're at now and what we've been doing. So I'll try and do this in 10 minutes. What I would just say, as a little bit of history to this is the idea of doing some kind of municipal bank has been in the air in San Francisco for well over a decade. And actually in 2003, there was a mayoral campaign and a Green Party candidate, Matt Gonzalez, actually put this onto his mayoral platform. He didn't win, but so this idea has kind of been floating around progressive circles and people looking at interested in alternatives to the current system. Where we really got off the ground in San Francisco is in 2008, I believe. John Avalos was elected to the Board of Supervisors. San Francisco is a city and county, so we have a Board of Supervisors, but it's kind of also like what a city council would be in some other cities. And he approached me and said, could you write a brief white paper about how we could potentially think about creating a public bank in San Francisco? I said, sure. I wrote a short paper. Who knows if he ever actually read it. And then he, I think in 2011, convened some hearings before the Board of Supervisors that were exploratory, and various people testified. The idea then sat for a little while, and he then sent a request to the city attorney. And the request was, do we actually have constitutional and statutory authority to create a public bank in San Francisco? And the city attorney sent back this very short memo and said, basically, no, there's this constitutional prohibition against the lending of credit, cite this certain section of the state constitution. This has been a recurrent story when people think about, could we begin to create these types of institutions at a local level? Is usually there's something that's cited in a state constitution somewhere that there's an explicit prohibition on the lending of credit or taking capital positions in corporations or associations. So John showed this to me, and I didn't at that time know very much about the California state constitution. Now I know quite a bit. But at that time I knew very little about it, but I knew enough about banking and finance that it was very clear to me that the city attorney opinion was very perfunctory. So we led a pushback, and we eventually got the city attorney to do a very serious reconsideration. We got one of their best people in the office put on this case. And they came back with the memo. And basically, to summarize what the memo said, in California, you have something called charter city, and there are charter cities and charter counties. And in other states, the term that it's often used is home rule. But the way most state constitutions are structured is that if you have some kind of home rule power, the state constitution will designate certain areas of what they call a statewide concern, a statewide interest. And the state has preemption in those areas. So if state law trumps any local initiative of a charter city, there's another, on the other sort of wing of this spectrum, is what's called statutory authority. So it's what the states, often through their government codes, specify cities and counties can do. So one is basically saying, here's state law, don't try and sort of meddle in this area. Here's what you cannot do. This is sort of off limits. We're sort of the boss in this area of policy and law and regulation. Here's what you can do. There's this huge gray area in between, and this is the case in every state I've looked at. And it's where, what the city attorney basically argued is that the charter city power, unless there's explicit state law saying this is an area of statewide concern, supersedes the Constitution. So this is, in some sense, the beauty of the US federal system, is that in states that devolve a fair amount of power to localities, you do sometimes have an actual, it supersedes state authority in those areas. So that's basically, in a nutshell, the legal framework. And I've consulted with some other cities, for instance, Seattle, exact same issue came up, and through subsequent conversations with some attorneys, after actually, Gwen and I were up there and somebody from Germany, and follow-up conversations, we actually determined that it's essentially the same, you sort of have this area. So it's basically given us, I like to think of it as our fishing license. It was sort of the green light that yes, you could potentially do this. It will be tested in court if we get that far. And so we've basically been, over the last year and a half, doing a lot of kind of under-the-radar screen development. We've done a lot of legal work, a lot of looking at financial strategy. We've done very, very extensive background work. We haven't been terribly public about a lot of this stuff because we wanted to make sure that we're on very solid footing before we actually take it to the voters. Because we anticipate, particularly if we start moving towards trying to form a depository institution, we anticipate that there could be a very strenuous pushback for obvious reasons. We don't know, but that's what we think will happen. So we want to be sure that we have a very, very solid, very kind of rigorous plan and framework in place to move forward. So how much? I'm probably almost out of time.
You're pretty close, but
okay. So I'm through about 1/5 of what I want to say. Basically, the way I would, and we could flesh this out in the question and answer, but the basic framework we're looking at is that cities have their general fund, which is sort of the politicized public part of the budgetary allocation process. There's other sources of funds that are publicly controlled. So there's the deposit base of cities that can vary in size. There's what's called investment pools, which in San Francisco is about $7.1 billion is currently in the investment pool. It's not general fund money. The deposit base in San Francisco averages in the last year at about 300 million. That's the deposit base tied to general fund. And there's also the pension fund, which is 6.1 billion, which is locally managed in San Francisco. So without getting deep into the technical details, there's money available that could potentially go into some kind of publicly controlled financial institution. And the idea is to constitute an institution that can then take that money and begin to put it back into the types of things we need. Now, very briefly, I will say that in the Bay Area, one of the issues that goes to the top of the agenda is housing. Currently, San Francisco is kind of out of control. It's like London or Manhattan. I think currently the average one-bedroom apartment in San Francisco is renting for about $3,000 a month. I mean, it's what's happened in the city with these recurrent tech booms. It's like the city of London. Or it's like Manhattan, where you have these financial centers. So housing is obviously a major, major issue, and you have this spreading wave of gentrification that's moving out of Silicon Valley, out of San Francisco into the rest of the Bay Area. So we're looking at things like, could we engage in major funding for things like community land trusts, housing co-ops. We're also looking at things like infrastructure investment. There's major capital needs in San Francisco and really throughout the Bay Area region. So the projects are anchored. They have to be anchored politically and legally in particular jurisdictions that have the authority to actually create this. But increasingly, we're beginning to think at a regional scale because some of these problems are regional and they're massive in scope. So the gentrification, the displacement of low-income communities. The Bay Area has lost over 20% of its African-American population in the last 2 decades, and it's linked to these types of economic processes. So I could talk more about this, there's enormous amounts that could be said, but that's kind of the context and what we're going. And we're going to hopefully be moving an ordinance by June to actually create pilot projects and begin to capitalize and fund not a depository bank, but a non-depository institution that would lay the groundwork for eventually moving in the direction of a full-scale depository bank.
Thank you, Carl. And next, we're going to have Ellen Brown, an attorney and founder and president emerita and senior advisor of the Public Banking Institute and author of 12 books, including the bestseller Web of Debt. In the Public Bank Solution from Austerity to Prosperity, her latest work, she explores successful banking models historically and globally. She's written over 300 articles on the subject and posted at her blog, Ellen Brown, altogether, and then .com. So let's welcome Ellen.
Well, this evening I thought I would address what we can say to legislators to be more persuasive and what we can say to our friends, so just in general, how we can make more persuasive arguments about public banking. So today, right now, what I'd like to do is address the last panel, all the issues that were raised there, because I do have quite a few ideas on that. They're not necessarily state bank ideas. Some of them would necessarily be federal, but I see that Be the Change is actually a lobby group, a 501c4 that is authorized to lobby federally, so I might suggest a few things that you could lobby for. But taking it from a state bank approach, the Bank of North Dakota does make 1% loans not only to students, but to startup farmers. So they have in there, you could put in your charter whatever you want, but their mandate is to serve the public interest, and they have certain things that they particularly emphasize, and one is student debt, one is agriculture, and one is energy. And because they know that oil is a boom and bust situation, in fact, they had a oil boom and bust before, they're trying to get away from oil, so they're looking for alternatives to fund. So that is what you could do with your state bank. And this evening I'll show how you can really make quick profits on your bank. Like overnight, you can be profitable on your bank. It's not something that takes decades. And what the Bank of North Dakota did was they built up their capital base over a number of years. And so doing this, just buying like municipal bonds, and then they use that capital base to make the more risky loans and extend it out into the community. So you could also do that. I too went to the University of California, Berkeley for free in the 1960s. And I went to UCLA Law School for $600 a year. I think it was $600 a year. It's now $45,000 a year for an in-state student. And part of the reason that the University of California system, so those are both University of California system, part of the reason that they've had to raise their tuition so much is they got into this whole derivative scam with Wall Street, and they can't get out of it. And their board is financiers. Their board are Wall Street people, so they're all about making money. And you could go back to the old system. You could fund your universities. Well, I think what we need is an economic bill of rights, which is what Franklin Roosevelt proposed back in the 1940s. And people should have a basic, you should have a job. Everybody should be guaranteed a job. You should have housing, some sort of shelter at least, and you should have the right to free education through university. And that could be done, and it could be done just by printing money. In other words, we the people should take back the power to create money from our banks who have it right now. Everybody thinks that would be inflationary, but it wouldn't. And I've gone to great lengths in my books explaining why it wouldn't. But what you do is we need more demand. Demand means money. Consumers need to have the money in their pockets to spend. Like Henry Ford said, you've got to pay your workers enough to buy your cars. So it would actually be good for the whole economy if we just drop money into the pockets of consumers, which theoretically was what quantitative easing is, but it's not, obviously. That's what Ben Bernanke was called Helicopter Ben, as if he was dropping money out of helicopters into the pockets of the people. But what he actually did was drop the money into the reserve accounts of banks, and the banks, of course, have used it to their advantage, but it hasn't gotten to us. In fact, they called it, because there was this fear of inflation, they called it sterilizing the quantitative easing. In other words, it's sterile. It's not going to get out into the real economy. But we need it in the real economy. Debt, the student debt is $1.5 trillion. So they could do the same thing that they did when they did like $1 trillion. The first was, I think, $1 trillion for quantitative easing. The second, it was actually suggested to Ben Bernanke, why didn't he make those very cheap loans to state and local governments the way he had done for the banks? And he said, well, it wasn't in his mandate. It wasn't in the Federal Reserve Act. Well, who wrote the Federal Reserve Act? And why don't they change it? I mean, Congress has the power to change the act if they understood what we're talking about here. So they could certainly do that. And they could, instead of buying up mortgage-backed securities, which are bundled, bundled mortgages, the student debt is bundled in the same way. And they could just buy up that $1 trillion of student debt, or $1.5 trillion, and rip it up. Or, just leave it on their books, but don't pursue it. And they can afford to do that. Everybody thinks, well, that would be inflationary. It would be no more inflationary than what they did for the banks. And that wasn't inflationary. It didn't drive prices up. So let's see. Oh, on regulation, this is just my thought. I mean, I'd love to write a book on, just how to save the whole system and how to fix it. I think the whole banking system should be it should be a public utility. In other words, it should all be owned by the government. Yes. And if you did it that way, you could guarantee every single deposit. There is no reason why, when you earn your money and you put your numbers up in the great computer in the sky, there's no reason that they shouldn't stay there. What are they paying us in interest? 0.01% or something like that. Like, they're not paying us anything. Yeah. So you could guarantee all the deposits, and you could create loans just on your books. I mean, that's actually what banks do, as I will show this evening, is they create deposits or they create the loans on their books. So that's the whole function of a bank, really, is to determine the creditworthiness of the borrower. Like, you go to the grocery store, if you wrote out your IOU, the grocer would not take it. But if you go to the bank and write out your IOU, then the grocer will check out, the bank will check out your, who you are and how you're going to pay it back and so forth. And they will write you these little pieces of paper that we call, these little negotiable instruments that we call money, that you can use at the grocery store. But that is the function of a bank, to turn your own credit into something you can spend at the grocery store. And all this stuff about collateral, et cetera, it just is necessary. I mean, it has other functions than what they've made us think it has. So I think ideally we could change the whole system to something like that. Sorry. Okay. And for small business loans, the Bank of North Dakota actually guarantees the loans of the banks that it works with, the local banks. So they don't even necessarily add more capital, they just guarantee the capital. So the local banks are able to make much larger loans than they would otherwise. And the Bank of North Dakota also helps with liquidity. So, and they don't do all the loans. I mean, they pick the good loans, the loans that they want to guarantee. It's not like they're the absolute guarantor of the local banks. They look around and they figure out which loans are going to serve their own mandate and which loans are going to be creditworthy, and then they help with those loans. So they help the local banks. So the local banks in North Dakota did not get into the subprime mess because they didn't have to sell their loans off the books in order to make room for more loans in order to have the capital, because they had the partnership of the Bank of North Dakota. So our state bank could do the same thing, follow that model. Mm-hmm. Thank you.
Thank you, Ellen, and thank you so much for sticking to the time. We're trying to catch up a little bit. Gwen Hallsmith is founder and executive director of the Global Community Initiatives, a nonprofit organization founded in 2002 that has offices as far away as South Africa. In this capacity, she provides executive services to the Public Banking Institute, author of Key to Sustainable Cities, Meeting Human Needs, and Taking Action for Sustainability, the Earth Cat Guide to Community Development, LASER, which means Local Action for Sustainable Economic Renewal. She has written 2 books with Bernard Lietaer, I think I'm pronouncing that right, Creating Wealth, Growing Local Economies with Local Currencies and Community Currency, another text which has been translated into 15 languages and used all over the world. So, Gwen?
Thank you. It's great to be here. I loved hearing about the time banks that you've set up. That's great. I also established a time bank in Montpelier, Vermont, that we adapted for elder care. And community currency and complementary currency can actually address some of the issues that we have with the monetary system and can address some of the problems that were discussed in the panel. So I don't want you to ignore that all in favor of trying to change the banking system, because changing the banking system is a big, difficult project, whereas you can mobilize your own credit and resources by developing community currencies like time banks and food currencies and commercial barter currencies that all help those issues that were described during that panel. I assume that Doug is changing the slides. Okay, I'll tell you when then. But the most important point, I think, that was made in the earlier panel, from my point of view, was that this is a moral issue. I really want to support the young man who said that, because I can't say enough about that. The system that we have now is systematically impoverishing our people and destroying our planet. And the root of it is in the monetary system and the way it's structured. But so many of us are blind to how it works that we don't understand the role that the dollars have in our pockets to that process. Every dollar that's in existence comes into existence through the issuance of debt. So every dollar in your pocket comes with the expectation that it's going to produce a return on investment for someone somewhere. If everybody paid back all of their debt, there would be no money. And when that debt is issued, the money to pay the interest isn't issued with it. Right. That makes it scarce. There's never enough money to pay back all of the debt and all of the interest. And what that does on a systemic scale is it makes winners and losers of all of us. All of the bankruptcies, all of the foreclosures come from the money itself. Not necessarily because people don't work hard enough, or they're cheating on their mortgage applications, or all the stories we hear about how millions of people lost their homes at the last economic meltdown. It's also a monoculture. We use the same kind of money for everything we do. And so when the banking system goes awry, the entire economy comes collapsing down around our ears, just like a monoculture crop. And so I want to applaud the people here that are working on community currencies, because they diversify the crops that we're using for our human exchanges, our human stores of value, and all of the needs that we have in our communities. We don't only have to change the banking system to do it. That's a big project, and we need to do that as well. But we can take action easier and faster than that. But with that, I'd just like to see a show of hands of people that think that the public banking idea that we've talked about is a good one. Yes, we've done our job. All right. So I'm going to talk a little bit about what you do next, how you get from here to there, and how you start the ball rolling here in Colorado to get this to happen, whether it's on the city of Denver level or on the state level. We've heard about the benefits of public banks, so I thought I'd just run through them again really quickly. They're a source of credit and revenue for local governments or state governments. They're a source of credit for the lending they want to do, and a source of revenue when those loans are paid back with interest, okay? Bank of North Dakota has paid over $300 million in dividends to the state of North Dakota. That could also happen here in Denver and Boulder. They provide lower interest loans to individuals, students, businesses, and organizations. You can actually get a higher interest rate on your deposits lower interest rates on your loans. They also give you more democratic control over how your local tax dollars work in your community. Right now, if they're deposited in Wells Fargo, they go out of your community all over the world, potentially. They also provide a rapid response to natural and economic disasters. As Ellen was describing before, when they had the flooding in North Dakota, the performance of the recovery on the North Dakota side with the public bank was much better than on the Minnesota side. Same happened in Vermont when Irene hit. Our local state lending agency, VITA, got right in there with the loans and helped people recover from that because it's a state agency, not a private bank. And of course, over the long term, and this is why I brought up community currencies, public banks can help provide clearing centers to break down the monetary monoculture. That's a longer story, but public banks could serve as the place where the commercial barter credits are exchanged, where time credits are exchanged, or where food currency is exchanged, because we'd have democratic control over all of these types of functions. There are a number of types of public banks in the works already. They're not technically banks insofar as they don't use the fractional reserve function for the most part, but they do the lending. And the lending is an important piece of what will help your public bank succeed. So what I advise people to do that are interested in setting up public banks is look for the lenders that already exist. Look for your CDFIs, your community development financial institutions. Look to see if there are places that could provide banking system services for the unbanked, like your post office used to do until the 1960s. Postal banks could be a good source of banking services for your local communities. How about an economic development partnership bank? That's like the Vermont Economic Development Authority in Vermont, an institution that already does the lending, and in fact, already does the riskiest lending, because they do the lending that we call for market corrections, where they do the lending that the big banks won't do. So when I was told when we were lobbying for a state bank in Vermont, oh, we can't do it because it's too risky, I said, wait a minute, we're already doing the riskiest part of this enterprise. How about internal infrastructure lending? With the 10% for Vermont program, where the state has transferred now $35 million from her deposits into our state lending agencies, one of the things they did was they did internal lending to the state of Vermont itself for energy improvements in our infrastructure. And Buildings and General Services Department was then responsible for paying it back with interest to give the treasurer interest on her deposit with them, essentially. No banking license required, kept the money working in Vermont, and by the way, improved our public infrastructure so that it performed better on the energy side. Mutual banks are another possibility that already exist as in the banking world, and this is where your town or your city and your county and other public entities might get together as depositors and form a mutual bank. That is another possibility that I know Karl talked about this in Seattle, and I thought that was a really interesting idea for how to proceed. Also, a lot of municipalities already act as a lender of last resort for housing and businesses. When I was the Planning and Community Development Director for the city of Montpelier, I was that lender. People would come to me and I had funds in a revolving loan fund that I provided to low-income homeowners and businesses that were in trouble to keep them afloat. Again, it was structured like a regular loan. I behaved a lot like a bank. I didn't have fractional reserve powers. That makes it a bank. But when you're looking at building on the existing public institutions that are already doing the banking, those are a good place to start to get allies and possibilities for moving forward. Another thing you can do is conduct a feasibility study like they're doing in Santa Fe, like we did in Vermont. Like now I hear, just as I've been here, I got a message from Seattle that they're going to charter that same kind of feasibility study. Nick Licata, the city councilor there, is putting out an RFP to do that soon. These are some of the questions that you want to ask in that study. You know, what are your unmet needs for financing? What kind of public bank will serve your needs? What capital do you need to set up the bank? You've heard a lot about these capital requirements of banks. That's actually a pretty difficult question, but interestingly enough, if you learn how to read your local, municipal, or state or county consolidated annual financial report, and we're doing a class on how to read these next month, February 20th. It's still next month, right? Tomorrow is February. If you're a member of PBI, you can take that class, so be sure to sign up. You'll find sources of capital for public banks because our municipalities, our counties sit on large capital reserve funds. Some of them couldn't be used. Certainly you couldn't use all of them, but they are a potential source of capitalization for a public bank. What are the cities or the state or county's needs for cash flow? When we did our feasibility study in Vermont, we found that using the 10% reserve requirement for our state bank wouldn't work because of the cash flow requirements of the treasurer's office. We have these large tranches of money that have to go out of the office a couple times a year for our schools. So we found that a 34% reserve requirement was a better bet. How much time do I have?
About another minute.
Okay. So I'm sorry. So I will make this slideshow available to the people making the videos, and so the rest of these questions you can get. The economic impacts are another thing you're going to want to learn about how to set up a public bank, and these can be significant. In Vermont, we found that a state bank would provide over 2,500 additional jobs, which maybe doesn't sound so big in Denver, but it's 15% of our unemployment rate in Vermont, and add over $340 million to the gross state product in the state. Those are significant numbers. If you could actually get legislators to use data to make decisions, it would be a no-brainer. But unfortunately, the banking lobby is very powerful, and we only got the 10% of Vermont program going. But what would the multiplier be? What would be your mission? And this I can't emphasize enough, that the mission of the bank is really going to drive a lot of what you do to set it up. If you do like what Karl was describing for San Francisco, where the mission of the bank is to focus on housing, that will lead you down one road. If you decide that the mission of the bank, as maybe they would be looking at in Boulder, and I did misspeak a bit before, that information about Boulder is only tentative and not public. So please. Anyway, if they use it for their municipal utility, that would be what the bank is set up to do, and that will drive a lot of these questions. But you need to think about that before you start the study so that you can look at the various purposes that you might put the bank to. In a city with as many students as you have, doing student lending and buying down the cost of student lending would be a really prudent thing to do. Even with the 10% program in Vermont, we're looking at carving out a piece of that to take some of the burden off the parents in Vermont who have taken out these big student loans with huge interest rates that you can't even refinance in that system. It's just a crime. I really think student debt is a crime. And I'm passionate about that, so forgive me. Housing and energy, all of these things are important things for looking at the economic impact. There's a lot of operational questions that you're also going to want to look at when you're trying to think about how to run a bank. And this is a list of some of them. I don't really have time to cover them all, but looking at all the ways you're going to manage risk. Because if you talk to your average community banker, they don't think of themselves as creating money. They think of themselves as managing risk. That's how they feel their job is shaped. And if you're going to run a public bank, you're going to have to manage a lot of those same risks because they're there, you know, liquidity risk, credit risk, geographical concentration risk even though you're going to stick with your own town. I mean, all of these things are questions you're going to need to answer. So getting to success, you want to develop a business plan, you want to have a legal plan, you're going to need a plan to how to approach this with your legislative body, you're going to need an implementation plan on how you're going to secure the capital and set up the systems and what software are you going to buy. Banking software is really expensive, by the way. You know, it's not cheap. You're going to think about how you're going to do your management and reporting, and always have an iterative review and revision process involved in that. So I want to make you excited about it, and I also want to be realistic about the work ahead. This is an important task, and we are intelligent people. that can take action on the local level to make our lives better. And this is an important action to take. So I'd encourage you to start the process. Starting has beauty and power and magic to it, right? Thanks.
Ellen, you did, or Gwen, you did so well that I felt guilty for asking you to stop. And now he reminded me he's been introduced before, Mike Krauss, and so everybody remember all about him. He's going to use my introduction time to give you more information. Mike?
Thank you. We're here in a piece of ground that has a sign out front, Magna Carta Park. That's rather fascinating. In June is the 500th anniversary of the signing of Magna Carta. The Magna Carta was the first practical expression of the idea that governments deserve their just powers from the consent of the governed. That's where it got started. And it's been a running gun battle ever since, you know, back and forth and back and forth. We're in a back time right now when the consent of the governed doesn't seem to mean a whole lot. So our job is to really focus or refocus and use the consent of the governed. So we've heard about why public banking is a good idea. We've heard what the needs case is and how public banking meets many of those needs. Let's talk realistically about how you get it done. It's a function of political will. If the will is not there, it's not going to happen. Tomorrow, in 45 minutes, the Congress of the United States could pass an amendment to Citizens United. 45 minutes. Throw it up for a vote, yays, nays, steamroll it, fast track it, done. It could be done. If the Congress wanted to, tomorrow, in 45 minutes, between both houses, if they wanted to, you know, they could actually start creating jobs with infrastructure if they wanted to. If they wanted to rein in the Wall Street banks, they could do it in 45 minutes if they wanted to. They don't want to. So let's get our heads around that fact. They don't want to. They lack the political will. But you do not. That's clear. You don't lack the political will. So how do you take your clear focus and your political will and focus it where it can do some good? So let's talk about the practicalities of developing and focusing political will. You got to look around the landscape. We've already decided Congress, forget about it. They're not going to do anything. Maybe your state legislature will, and maybe they won't. There are big bodies in Pennsylvania, it's, you know, hundreds of people. You got to get them to come around. There are banking lobbies. They talk to them every day. I don't know how many banking lobbies are in Pennsylvania, but in Washington there are 17,000. So what are your odds? How often do your congressman hear from you? Anytime. And does he care? I have no idea. Maybe he's a great guy. In Pennsylvania, there's a similar problem. You know, to get to my state senator and my state representative, I can do that. It's a 20-minute ride maybe, and I can, you know, make an appointment, actually see the guy. That's true. But I don't see him 5 days a week in Harrisburg. We have a full-time legislature, which is a curse of mankind, probably. But these guys, you know, they never stop doing their thing. They don't pass a lot of laws, but they seem very busy for some reason, you know. And they're talking to people that you don't see. You know, maybe your congressman, your state rep, your state senator hears from you every now and again. He hears from the interest groups day in and day out. Day in and day out. Breakfast here, lunch there, dinner there, someone else picks up the tab. Conferences, you know, they fly out to the bank-sponsored New Horizons Banking Conference in Cabo 215 with their wives, you know? That's how this game is played. So how do you break into that little circle of private communication? Let's talk about that. All these people respond to somebody. They respond to constituencies. So how do you get under the decision makers? If you're going to city council, who do your city council members listen to? Well, they probably listen to unions, most likely. They probably listen to community bankers, most likely. They probably listen to CDCs, community development corporations, most likely. They may listen to faith-based groups, most likely. I wouldn't doubt that at all. They may listen to civics like the League of Women Voters, most likely. You've got to get to those organizations with established presence and get them on your side. Same thing if you're going to a state legislature. Who do those people listen to on a day-in, day-out basis? I just ran the list. There are others, of course. You've got to get to them and get them to understand your message so they, these organized groups, already organized, help carry your message to those state legislators. And that way you magnify your message, become more powerful. And along the way you identify the other interested parties. I look at public banking as a cornucopia. It's this great big, and in there is something for everybody. If you're a local elected official, there's non-tax revenue, driving down debt service costs. So you know, What elected official these days doesn't preach the gospel of no or lower taxes? It's everywhere. Okay, want to keep taxes down? Let's get some non-tax revenue. Want to keep taxes down? Let's reduce your debt service. Want to keep taxes down? Let's increase economic activity, which brings legitimate taxes into your business without raising the millage on your homes. Okay? If you are a small business owner, Chamber of Commerce member, okay, we've identified here today in several panels the variety of impacts a public bank can have on a variety of business activities within your community. Get to those people, get to Chambers of Commerce, and talk to them. If you care about, and Gwen said it eloquently, maybe different words, if you care about a just society, then you want to get to your faith groups. We're in a church, that's rather apropos. We got the Magna Carta on one side and God on the other. What could go wrong? You know? But you want to get to those communities. Now, in Philadelphia, I'm telling you, if you don't talk to black churches, you haven't talked to anybody. It's just how it is. So, okay, get to those communities. Identify your faith leaders. Identify your business leaders. Identify your banking leaders. Identify your student leaders. If it's a state, identify your agriculture and farming leaders. Get to the other communities of interest that can have a stake in this. Point out to them what public banking can do for them and say, you know what, we all get together on this one. It is a fact that in many states, we get Tea Partiers and occupiers in the same room, all going, yeah, because they actually hate the same thing. The Tea Partiers hate Washington, occupiers hate Wall Street, but since they're the same thing, they hate the same thing. But they get it, and they understand this, and they come together, and they find common cause. That capacity to find common cause is really something that's tremendously lacking in our politics today. We're also segregated, segmented into our own little thing, that reaching out of our comfort zone and talking to others and listening to others is really a struggle these days, you know? We only listen to the news channels we like. We only read the blogs that we like. You know, that's what we do these days, because there's too much out there anyway, so you gotta make a decision. I'll just listen to what I like. We all tend to do that, all of us. We need to stop doing that and talk to people who have ideas we don't necessarily like and look for the common ground. So as a practical matter, to get anything done, you must build political will and decide where you're going to focus it. I've argued, and I'll keep arguing, Congress is a waste of time. Nothing's going to happen there. If it were going to happen, it would have happened. It's not going to happen. Your state legislature is the next best coming down the line, but that's a tough lift. It takes a long time to get there, as Gwen was discussing. You know, you've got to prep that ground, educate them on the topic, find leaders, but you find them when you find the constituencies to whom they listen already. Much easier, not really easy, but easier, is getting close to home, focusing on your cities and your counties, fewer decision makers. You know, if my congressman goes off to Cabo with his wife, comes back with a great tan, I never see the guy. But if my next door neighbor, the councilman, goes away for a week, comes home, hey, Fred, where you been? Oh, I went to Cabo, had a great time. And you say, who paid for that? Oh, well, it was a banking conference. So what? I mean, you know, you actually notice what your local people are up to because they're close to home, they're close to you. So I would say, in building political will, the closer you focus to home, the more likely it is you'll focus strong political will where something is actionable. So if you want to find a great way to celebrate the Magna Carta, I would suggest that your own little revolution right here in Denver is a great place to start. Thank you.
Earl Staelin is a lawyer here in Denver, handles both civil and criminal, and he's been co-sponsor of several successive versions of initiative to amend the Colorado Constitution to establish a state-owned bank. He's attended conferences at the Public Banking Institute and for the American Monetary Institute. He's made presentations on monetary reform to a number of organizations, as well appeared on TV and radio on this topic. He's on the board of directors of Be the Change USA and is co-facilitator of the community forum here at the First Universalist Church of Denver, to which we want to say thank you for getting us here. And please.
In 2010, a group met in Colorado. A group met in Colorado called the Main Street Stakeholders focused on getting a state-owned bank. And there were several Democratic legislators in the group. There were a number of community-oriented people, several of whom are here. I attended some of those meetings at the later tail end of that. Another person who attended was Bob Bose. And it turned out that the group had made a request to the Legislative Council regarding the feasibility of a state-owned bank. And they got a letter back that had been reviewed by one of their attorneys. And it basically said there were constitutional issues. It didn't say it couldn't happen, but that there were constitutional issues. And it also turned out that the legislators, who are mostly Democrats, were not willing to push ahead with it at that time, and I think it was largely because of this letter. In addition, that fall of 2010, there was a Tea Party conference that actually had invited Marilyn Barnewall, who some people have called the dean of state-owned banking, or the dean of public banking, on the Republican side. She's kind of a Tea Party Republican. And she drafted some legislation for Colorado that would have proposed a state-owned bank on the North Dakota model, a partnership bank in the way that Ellen described, where the bank doesn't make loans directly on a retail level, but partners with community banks. And there were two legislators at that conference, both of whom were at that time committed to introducing legislation to pass this in Colorado. Well, several months later, we're into the 2012 legislative session, and they apparently got a lot of heat from a national organization, I presume, with bankers on it. And they decided not to introduce the legislation. And so Bob Bose and I got together and decided, why don't we introduce an initiative? We discussed this with an attorney who's been very much involved in studying the problems with the Tabor Amendment, which of course restricts revenue and expenditures by the state. And we concluded that based on this letter and the reluctance of legislators, that we were very fortunate that Colorado had an initiative process that would allow citizen action to actually establish amendment, which of course has been done with a number of things over the years. Marijuana is one of those most recently that passed. And so we drafted a measure that was a proposed initiative to amend the Colorado Constitution to establish a state-owned bank and to exempt the bank from Tabor revenue and expenditure limits, and otherwise to enable this bank to partner with community banks and so forth. We took it through the Legislative Council and got their feedback, and we knew this was going to be a multi-year project because it's that difficult to get initiatives through the legislature, not the legislature, but the Legislative Council, the Title Board, and then the Supreme Court, if there's opposition to it on legal grounds. We got through the Title Board in 2012, and the only opponents were the two banking associations here in Colorado, the Independent Bankers of Colorado, which tend to be dominated. They have a number of community banks in it, but they tend to be dominated by the big banks, which I think is why they haven't come out and done more to endorse this idea. And the other is the Colorado Bankers Association, which is predominantly the bigger banks. And they had their lawyers there with long briefs and arguments contesting a whole lot of issues in this. But we got through the Title Board both times. They set a title and it went to the Supreme Court. Well, we had a technicality. We didn't plan it this way, but it turned out that the day of the final hearing coincided with the first national conference of the Public Banking Institute in Philadelphia, and Bob was helping the moderate the conference in Philadelphia of Ellen's new institute. And so he couldn't be at the hearing, and there was a new rule that had come in the year before that said both sponsors of an initiative must attend every hearing of the title board. And we ultimately couldn't get through on that. And then there were some other technical issues. It's been reintroduced several times, and we wanted to test out some of these legal objections that were made by these two banking associations. And one of them was we provided that the bank could pay funds from the bank, assuming the bank makes a lot of income. We would want it to pay excess income into the general fund of Colorado, so it would not be subject to Tabor limits and therefore would not have to be refunded 100% to taxpayers. And that went through and went to the Supreme Court, and they ruled against that. They said, we can't do that. And then the most recent time, they said even the bank's revenue would be limited. But we didn't appeal that, and kind of another option we're thinking of is based on an exception within Tabor to these revenue limits, and it's called a Tabor enterprise. And by definition, if you meet several criteria, and there are a number of these so-called Tabor enterprises, then you're not subject to revenue limits or spending limits that are in Tabor, which are basically geared to, you can never increase the size of government more than the rate of inflation and population, okay? And so you're basically frozen indefinitely, and then when funds go down, the allowed government spending could even decrease. Well, the Tabor enterprise would allow getting around that. And the three main criteria are, one is it's got to be a governmental institution. It's got to basically be self-supporting, which a bank is, collects interest, and so it's self-supporting, and cannot receive more than 10% of its income from the state. You can actually receive some income from the state. And the third is it must be authorized to issue revenue bonds. In our previous measure, we had come to the conclusion we should authorize the bank to issue general obligation bonds so that the bank would have enough initial funding to get a good head start. We didn't want the bank to take 30 or 40 years like or maybe 50 years like North Dakota did to get to the point where it had earned enough, that had a big enough base to really affect the economy. And North Dakota now has assets of, Ellen may correct me if I misquote this, but it's in the range of $6 billion. And you should probably all Google the website of the Bank of North Dakota. You can read its annual reports and see. How am I doing, Dennis, for time?
A couple more minutes.
A couple more minutes.
You're doing very well.
Okay. So the Tabor enterprise, the self-supporting enterprise, would let us get around that. We could authorize it to issue revenue bonds. And you know, based on the experience of North Dakota, we might want to issue far more revenue bonds than even $6 billion. So we'd have a big enough base to start off with sufficient lending to really make a difference. And of course, the difference, as Ellen has pointed out, is extraordinary. I mean, all the taxpayer money comes into the bank, all the money Colorado taxpayer, all the money that Colorado taxpayers pay comes into the bank and can be loaned out. And of course, North Dakota's experience in the last 10 years is an average return on equity of 22%. I'm not saying we would start off with that, but 10% is not unrealistic. And the present situation is that all of that money goes into the major Wall Street banks who have no legal obligation to Colorado whatever, and invest in derivatives and endanger our economy and pay us less than 0.5% a year and charge us a lot of fees for the privilege of storing our money in their banks. whereas the state-owned Bank of Colorado would have a legal obligation to support in the state, and as we put it, agriculture, infrastructure, commerce, industry, education, public health, safety, housing, and other beneficial purposes. All these things that could make, that the bank could make an enormous difference in, that people have talked about. It's a very potentially nonpartisan issue. So the Green Party has endorsed this idea. Bill Still, who ran for president on the Libertarian ticket, came in second and won about 1/3 of the vote 2 years ago, 2 or 3 years ago now. Democrats and Republicans, I, until recently, worked with a firm of mostly bankruptcy lawyers representing medium-sized corporations, and they've experienced enormous numbers of bankruptcies because of the 2008 crash. So you've got many predominantly Republican-owned businesses that would benefit enormously from this. Loans to small and medium-sized businesses that Wall Street's not doing. So we have a chance. We want to, I think, next do a feasibility study. Go for a grant. We received a very helpful grant from the Denver Foundation. We want to seek a larger grant to help us do a feasibility study, recheck some of these legal issues so that we're going to get through the Supreme Court. And once you get through the title board, Supreme Court, then it's pretty expensive to get a petition signed. Realistically, about $250,000 to get, within 6 months, to get 120,000 or so signatures. And then to go to the voters, given the enormous amount of money that is going to be put up against this kind of a measure, people estimate you'd want about 1/3 of as much money as they're going to spend if you're going to get it through. So, and it would take enormous effort, hopefully everybody here and everybody you know and everybody they know, and it could be done.